And so here's a perfect example, and this is off of the what we would call the cheat, the low cheat right here. It's a perfect example, and this was already an existing um, security, obviously, but this is where they put the ETF and it formed what looks like an IPO. But you've got this little low cheat. We bought it right here, right? Took a full size, big position right into strength, reduced it. Um, Bitcoin could be volatile, so I said, you know what? Let's take some off the table here. Now we're free rolling, right? But then it's set up, and like I said, you could sometimes get very often your best buy is at a higher price. So it sets up, it tightens up real nice here and holds its gains, sets up a perfect, if you look at it, it's a perfect cup with handle, right? VCP, what I call it. Boom, comes out here, we're back in. We move right back up and we ratchet up again. And I do the process all over again. I reduce it into the strength and I cover my risk once again. And now I've already backlogged a profit, and now I backlogged two profits. So now I'm really free rolling. Moves up a little more, I reduce, and then it had this break. And I felt like, oh shit, I should have sold it into the strength and just closed it. But I got what I call the gift. When you get a big break and you get that dead cat bounce, especially if it comes back 2/3 or so, I usually just get out right then and there. So I punted it on that next day. And then it went up a couple more days, rolled over. Now we tried to get back in it over here as it came off the lows here on a little pullback buy. And we were thinking this will probably not take off right from here. It'll probably come up and tighten up, and then we'll add to it. And it did. And it was looking perfect, but then it turned tail and we put a break-even stop. We got out. Then we kept watching it, watching it. It went through this, it undercut these lows, perfect, tightened up. Now I was like, okay, this is it. This is where it's really going to take off. We got a nice big base now and really getting aggressive on it, and started buying it right here again. And then we just put a super tight stop, got out on it right away, got stopped out of it. And I thought I might have blown it because right after that it took off, went up a few days, and Mark, we had a conversation. He's like, "Uh-oh, I think we might have got out too quick here." But since then it's rolled over, and now we're out of it. But that's the way we're trading around positions. We're adding back, we're reducing, we're using strength to sell into, getting out when the getting's good, and not walking away from a stock. Even there's sometimes where I'm buying the stock on the fifth base. I was buying it on the first base. I sold it. The second base, I bought it 5, 6 times, buying it as it comes out of base after base after base. And then when you string it all together, you got this really nice big return on that stock, but it's from a number of trades.
And jumping with the question, because you mentioned free rolling a trade, and just to clarify for people who may not be familiar with that,
Yep.
when you say reduce, if you could go back to that chart just quick, sorry.
All right.
Um, no worries. I'll ask the question as you bring
Which
it up.
chart do you want? The Bitcoin? The
Yeah,
Bitcoin?
this one,
Yeah.
IBIT. Yeah. When you say reduce, and that label, when you're selling for that first push up, you're also moving your stop up to break even, and that's what's free rolling the trade. Is that correct? And is there anything you want to add there?
So, all right. So it's a great question, Mark. If you guys have anything to add, I know usually we're talking the same.